Okay, what is the difference between a repair and an improvement? Jeff, you love this stuff, so you get to answer this one.
All right, prepare yourself for more accountant talk. So for a long, long time, this has been a really big issue because accountants didn't always agree with what IRS called repairs and improvements. So a few years back, IRS came out with new rules called the captive repair rules. And what this specifically does is it gives us some safe harbors for deducting repairs, improvements, things of that nature. So I'm going to talk quickly about two of the safe harbors. One is called the de minimis safe harbor and deals with tangible property.
Real quick, what's the difference between a repair and an improvement from a tax standpoint? Why is this important?
A repair is anything you do to a piece of property, whether it's personal property or real estate, to keep that property in.
And you can write it off.
Yeah.
So you get a deduction for a repair. Do you get to write off an improvement?
No, an improvement needs to be capitalized. It needs to be depreciated. And mainly what they consider an improvement is anything that is a betterment that makes your property worth more, or your vehicle, or whatever it is you're improving.
Right. So if I have a piece of property and I have a roof leak and I fix it and repair it, can I write that off?
Absolutely.
Now, what if I replace the roof?
Then it starts getting a little tricky.
Now I have to spread that out over what? Residential properties?
Residential property, 27.5 years. And the roof repair, the roof replacement is a perfect example of, it's now a question of how much of the roof you've replaced, what you did to replace the roof, that determines whether it's a repair and improvement. So there's really no fine lines between these things.
Right. So this is why the de minimis safe harbor election is so important. So Jeff was just talking about it. And what this means, and he'll give you the rule, is that if you are underneath this amount, you are a repair and you can write it off. So go for it.
So the de minimis safe harbor says if you have repairs, improvements, they don't care what you call them, and they're less than $2,500 per item per invoice, you can deduct those.
Period. They don't get to question it.
There's also a second part of this, that if you have what they call applicable financial statements, this is basically audited financials, or if you have to do SEC or HUD financials, something to a government agency, it doubles to $5,000.
Oh, wow.
So we don't see a lot of those.
So here's the practical effect. You have a contractor comes in and says, hey, I'm going to do a bunch of stuff to your rental property. Yep. And it's going to be $10,000. You may want to stop them and say, please invoice me separately for each area of work, breaking it down. So like, it's not like, hey, I'm actually replacing your roof, but I'm breaking it into 4 invoices. Probably not that, though.
Right.
Yeah, there's people that would say do that, but I'm not one of them necessarily. But let's say you're getting the sidewalks done, some other things. Keep it under $2,500. It's a repair. You get to write it off this year.
And this is what kind of leads into our second safe harbor. It's called the safe harbor election for small taxpayers. This one is designed specifically for real estate. And what it says is you can deduct anything that's less than 2% of your property, or the lesser of 2% of your property, or $10,000. So let's say you have a $200,000 property, you can deduct up to $10,000 worth of expenses.
200,000? It would be. Do you say 500,000 or 200,000?
No, I did the math wrong.
Oh, so what is it?
So anyway, the maximum is $10,000.
Maximum 10,000, but it's 2%.
Right.
So all right. So it's not, so exceed the lesser of.
Right.
So if you have a $200,000 house, it's $4,000.
$4,000.
Right. Automatic.
And that's for expenses throughout the year.
Mm-hmm. Add them all up.
Otherwise,
we're looking at invoices, and we want to keep below the $2,500 that threshold.
One thing you bring up though about the improvements, the contractor and all. Mm-hmm. Sometimes we want to get costs segregated because we can depreciate them separately.
I love you bringing that up. Yeah.
If you have cabinets put in your kitchen, we can usually depreciate those over a shorter period.
Do you do cost segs on small rental properties? Because
we have gotten some cost segs. We don't do them ourselves, but we usually have engineers or.
So this is how it works. If you buy a rental house and you're told, hey, I can write off the improvement. You can't write off the land, but I'm writing off the improvement. I'm depreciating it called straight line over 27 and a half years. We'll say it's residential property. Right. Or if it's commercial, it's 39 years. That's a really long period of time. But I want to get more deduction in the first 5 or 6 years because I know that there's parts of this property like the electrical system or the HVAC. I can break it out with a qualified engineer doing the cost segregation analysis. Does it have to be an engineer? Or can it be anybody?
I think it can be anybody. What we primarily looking for is that backup to where we're coming up with our numbers.
Yep. And what it means is they'll take the HVAC, for example, instead of saying that's going to last for 39 years, we know that it's not. Actually, HVAC would qualify for an immediate deduction under 179 up to $1 million. You write off immediately in the year that you acquire it. It's huge. But let's say you took your cabinets. Right. How long are cabinets? Like 5-year property?
We could probably do those over 5 years. It might be a 7-year property.
Then you look at the electrical. There's wires. There's plumbing. There's other components. There's like the little electric plates and all that stuff. That might be considered 179 deduction, which means there's lots of stuff that you can write off immediate. Then there's also bonus depreciation too.
Correct.
So property that would be less than 15 years would be generally you could bonus it all and depreciate it in year 1. The reason I bring this stuff up is it can be huge for somebody who's investing in property that has lots of income coming in off those properties, but it doesn't want to get killed in taxes.
Well, let's take, for example, your commercial property that has that really long 39-year life. And you put in redo the parking lot, put in $20,000 into the parking lot. Mm-hmm. That's called a land improvement. And it's important that we segregate those kind of expenses because they can be large. Land improvements are depreciated over 15 years rather than the 40 years. So this kind of feeds into the whole thing that we need to make sure that we're segregating our cost.
Yeah, so I'm going to break this down. We had 2 questions that related specifically to this. I'm going to take you guys out of order a little bit. Does the $2,500 per item per invoice apply to rental properties? The answer is yes. Sometimes we buy properties that need repairs to get ready to rent, but most of the items we do are under $2,500. Can we expense those? Yes. You'd be in the safe harbor. So you can expense those. Don't listen to your accountant who's trying to make you capitalize them. Right, Jeff?
No, I don't know what you're talking about.
Yeah. Is 25-year depreciation under the new tax law? And that's still 27 and a half and 39 that I know of. I don't know. Right. 25. What they did do is bonus depreciation, which is 100% for things under 15 years. And they added carpet, HVAC, and a few other items under 179.
In general, carpet and paint and a rental property, interior painting and carpeting have always been deductible. Mm-hmm. The HVAC was a huge gift because it was always a huge problem.
And the HVAC is under 179 or bonus depreciation. You could write it off.
Correct.
Like today, you don't even have to pay for it. That's the beautiful part. Like you could put it on credit. You could actually, in certain cases, lease to own. Jeff wants to kill me every time I say that because there's a paid-on termination clause, but I don't really see those applying to too many HVAC systems. But let's say I finance my HVAC. I could get a huge tax deduction this year, give myself a nice big tax break, and I'm buying everything on sale. All right, next one. We could spend all day on the real estate side, on the rental real estate especially.